It's wild to think how quickly the beauty and wellness landscape changes. What was the it product last year feels, I don't know, almost old news today.
Totally. It moves so fast.
Yeah, and all this buzz, all this new stuff constantly popping up, it makes you wonder what are the real, like, lasting trends and where's the money actually going?
That's the million-dollar question, isn't it? And to help us get a handle on this, we're doing a deep dive into the Baird Beauty and Wellness Industry Outlook 2025.
Okay, Baird, so a solid source.
Definitely. Think of this as our kind of insider's guide. We're pulling out the key insights on what's driving consumer behavior, and where the smart investments seem to be heading in the year ahead.
Gotcha. So we're not just like guessing here. What kind of ground does this report actually cover? What are we getting into?
It's really comprehensive, actually. We're going to unpack three main areas the report hits on. First, we'll get a good look at the U.S. consumer environment.
Okay. What are people buying? Why?
Exactly, what they're buying in beauty and wellness and what's influencing those choices. Then we'll explore the M&A market.
Mergers and acquisitions, right? Who's buying who?
And crucially, why? Then finally, we'll look at the equity capital markets, IPOs, public companies, to see where the big money is flowing in the sector.
All right. So consumer trends, M&A, and the stock market side of things.
Yep. Our mission here is really to give you the essential understanding of the shifts and opportunities the report highlights for 2025.
Sounds like a plan. We've got a lot to unpack. Let's jump right into the consumer then. What's the overall vibe? How are Americans feeling about spending their cash right now?
Well, the report kind of paints a picture of a consumer navigating a bit of an economic crossroads. Spending's still happening, for sure.
Okay.
But there's a clear expectation that in 2025, people will be much more, let's say, thoughtful about where their discretionary dollars go, especially in areas sensitive to interest rate changes.
Interest rates, right. That's been the constant conversation. How specifically are those ripples being felt here in beauty and wellness?
It's interesting because the report points to a somewhat contradictory spending environment. Like on one hand, the consumer price index rose 2.9% year over year in December 2024.
Still higher than the Fed wants it.
Right. But in that same period, retail sales growth actually accelerated,
Yeah.
hitting 3.9% year over year. Probably fueled by holiday shopping, but still.
Huh. So people are still buying stuff, even with inflation.
It seems so. They're still opening their wallets, but maybe being more selective about what they're actually putting in their carts. More discerning.
That makes sense. With prices up, you'd expect that. But the report also mentions consumer sentiment actually improved. That feels a little counterintuitive.
Yeah, that was interesting. Despite some of the, economic uncertainties and policy shifts, the Consumer Sentiment Index saw a pretty significant bounce back. It hit 74.0 in December 2024.
And that's high.
It's the highest it's been since 2020. And a key driver seems to be the view on inflation as it starts to moderate, even just a bit. Consumers are feeling more positive about the overall outlook.
Okay, so even if the job market isn't like booming, that feeling of maybe inflation easing up is lifting spirits.
Precisely. The report does note the U.S. labor market cooled down through 2024. We saw rising unemployment, softer payroll data than expected.
Right.
And then, of course, there's the role of the Federal Reserve.
Ah, yes, the Fed. They started to ease up a bit in 2024, didn't they? 3 rate cuts, including one in December.
Exactly. The December cut was pretty widely expected. But the current market expectation is for maybe only one more rate cut in 2025.
Only one. Why is that?
Well, inflation is still sticking around, near 2.7%. So the Fed's in this tricky position, right? Trying to support growth without, letting inflation take off again.
It's like trying to keep a seesaw perfectly balanced.
It's a good way to put it, yeah.
Okay, so we've got this picture. A cautious consumer, maybe feeling slightly better about inflation, and a Fed walking this tightrope. Let's dive into what everyone really wants to know. The beauty trends. What's grabbing people's attention in skincare?
Okay, yeah. If there's one huge theme in skincare, it's this relentless pursuit of real results. Efficacy.
Efficacy, not just fancy packaging.
Exactly. The report really emphasizes that consumers, and investors too, are prioritizing formulations with solid scientific backing. Get this, searches for efficacy in skincare jumped an astounding 700%.
700%? Wow.
Yeah, it signals this maturing consumer who isn't just swayed by marketing anymore. They want transparency. They want scientific validation. Brands that can really show their products work, they're likely going to win.
So all those beautiful ads might be losing some punch if the product doesn't deliver.
Seems that way. People want proof. And this demand for expertise, it's also fueling the growing influence of dermatologists.
Makes sense.
Right. The report says 39% of Gen X and older consumers really value products recommended by doctors.
Mm.
And interestingly, derms themselves are becoming distribution channels.
Smart. Builds trust. Now, the report also mentioned something called exosome technology. Sounds very sci-fi.
It does have that cutting-edge feel. Exosomes, they're derived from stem cells or plant cells.
Hmm.
They're being called the new PRP. Search interest shot up 260% in 2024.
Okay. Sounds hot, but is it legit?
Well, that's where the report adds a note of caution. The dermatology community. It's
Yeah.
still kind of divided. There aren't a ton of big clinical studies yet, and it doesn't have FDA approval.
So lots of buzz. Maybe the science needs to catch up.
Exactly. Excitement's there, but the evidence is still developing.
Interesting. High tech, but maybe not prime time yet. What about the everyday stuff most of us buy, like drugstore or department store level?
Yeah, the report highlights the continued strength of what they call the prestige segment.
Prestige. Mass plus prestige.
Right. That sweet spot between mass market prices and prestige quality. It was the fastest growing skincare segment in 2024, grew 17%,
Wow, compared to
just 2% for prestige and 3% for mass. So consumers are really finding value there, it seems, getting good stuff without totally breaking the bank.
That definitely fits the economic mood we talked about. And what about the line between skincare and makeup? Is that blurring?
Totally blurred. The report really emphasizes this. Consumers are actively looking for hybrid products, multifunctional stuff.
Like foundation with serum in it.
Exactly. 50% of U.S. consumers now prefer products that offer both skincare benefits and makeup coverage. It's all about streamlining routines, getting more bang for your buck.
Efficiency is key. Okay, moving on to makeup. What's generating buzz in color cosmetics?
Lips are big, especially balms and oils. And blushes, too. Those are really driving growth. Prestige lip product sales up over 10% in 2024.
Nice. So healthy lips, rosy cheeks.
Pretty much. And looking ahead to 2025, the expectation is color cosmetics overall will do better, fueled by social media, of course, and more use of those hybrid products we just mentioned.
Got it. That no makeup look, but maybe a bit enhanced.
That's a good way to put it. Now let's talk fragrance. That category seems to be having a real moment. It really is. The growth there is being driven by just more consumption. New people are coming into the category, and existing users are buying more scents for different occasions, different moods.
So people own more perfumes now.
Yeah, it's boosting household penetration significantly. Perfume and cologne penetration up 2.1 points, body mist up 3.1 points. And get this, fragrance was the only mass beauty category that actually gained penetration.
Wow, that's notable. What's behind that? Any specific trends?
The report points to some interesting generational stuff. Younger consumers, Gen Z, Gen Alpha, they're leaning towards indie brands, sustainable fragrances, and body mists. Body mists are like 20% of the category now.
20%.
Okay. Meanwhile, older generations, Gen X, boomers, they tend to stick with their established prestige brands. Oh, and there's growing demand for alcohol-free fragrances, too.
Alcohol-free. Does it last?
Brands are working on that, innovating to make sure the scents have staying power.
Fascinating. It's cool how different generations shape the market.
Yeah.
What about hair care? Feels like that's gotten way more complex lately.
You totally hit on a major trend, the skinification of hair care.
Skinification. Applying skincare principles to hair.
Exactly. Just like skincare, people are adopting multi-step routines. They're using specialized products, focusing on hair wellness, things like hair growth treatments, serums, scalp care.
Scalp care. Yes, that's everywhere now.
All right. And those subcategories saw growth over 20% year over year. Really impressive.
So are people spending more on high-end hair products then?
Absolutely. Prestige hair care sales grew 14% in 2024. And higher-priced items, stuff over $30, they now make up about 25% of all unit sales.
A quarter of sales are premium products.
Okay. Yeah, just people are willing to invest. And online is huge here. E-commerce keeps growing by double digits for prestige hair care. It's the main channel now.
Okay, so skinification, premiumization, online dominance in hair. Got it. Now, moving beyond those core beauty categories, the report highlights adjacent areas growing fast. Wellness seems to be everywhere.
It really does. The wellness market is just expanding like crazy, and big retailers like Target and Ulta are making major moves.
Oh yeah, what are they doing?
Target, for instance, launched like 2,000 new wellness products recently. Everything from fitness gear to mental health aids to wellness tech. Ulta's expanding its dedicated wellness shop to all its stores, too.
So it's not just about looking good on the outside anymore.
Precisely. We're seeing this major convergence of beauty and wellness. More beauty brands are jumping into traditional wellness categories, supplements, functional beverages, personal health stuff.
Interesting. Beauty brands selling vitamins.
Yep. And this convergence, it's been a huge driver of market expansion. The combined beauty and wellness market is now valued at a staggering $140.7 billion.
Whoa.
That integration has basically expanded the traditional beauty market by about 45%.
That's massive. What specific wellness areas are really getting traction?
The report highlights more shelf space and interest in things related to mental health, sexual wellness, and menopause.
Okay, breaking down some taboos there.
Definitely. It underscores that. Like, 90% of consumers are actively doing something wellness-related now. It's just fundamental self-care.
And it's not just products, right? There's education, too.
Yes, that's key. Brands and retailers are investing in educational content, personalized recommendations, helping people make informed choices, especially for things like supplements or menopause products where you want more info.
Makes complete sense. Okay, let's talk tech. Beauty tech, another area that seems to be moving at light speed.
It absolutely is. Beauty tech is getting smarter, more personalized, and driven by demand for non-invasive treatments, at-home convenience. Beauty devices are definitely making a comeback.
Those LED masks and things, we see them all over Instagram. Do they work?
Well, the report specifically calls out LED technology. It has established benefits in dermatology, right? And it's being built into more home devices.
Like what?
Shark launched an LED CryoGlow mask. Medicube unveiled its new Booster Pro device at CES 2025 that has microcurrent and LED, and online surges for LED face masks, up over 45% in 2024. So interest and probably adoption is strong.
Okay, so people are buying these gadgets. What about AI? Is artificial intelligence playing a role?
Absolutely. AI is becoming really integral. For personalized recommendations for device innovation, L'Oreal is investing in personalized skin assessment with its Cell Bioprint device.
What does that do?
It analyzes your skin's biological and chronological age to recommend treatments. And Ari Pacific has an AI app, Wanna Beauty, that uses voice activation for personalized makeup advice.
Wow. It's like having a personal beauty AI assistant.
Pretty much, the level of personalization is getting remarkable.
Okay. Now, the report also touches on some broader themes impacting everything. Let's start with the elephant in the room, TikTok.
Yes. TikTok's influence, especially on Gen Z and Gen Alpha, is just undeniable. It's central to how they discover and buy things.
And TikTok Shop is a big part of that.
Huge. Beauty and personal care is the #1 category on TikTok Shop in the US, and the platform itself. It shot up to become the 5th largest e-commerce merchant overall.
5th largest already. Wow.
Yeah, and 46% of 18 to 34-year-olds have bought something through TikTok Shop. Body care, makeup, hair care are the most popular.
Those numbers are staggering. So what happens if there is a TikTok ban? We keep hearing about that possibility.
The report suggests that would force a major rethink of marketing strategies for brands targeting those younger groups. YouTube is seen as a potential alternative for creators.
But it's different, right?
Very different. The monetization, how people consume content, it's not a simple switch. Brands and influencers would really need to adapt.
A huge potential shakeup. Okay, another big theme, the evolving retail landscape. Where are people actually buying beauty products now?
Online sales have just surged. Right now, 43% of all beauty sales happen online. That's up from 33% back in 2021.
43%. And who's winning online?
Amazon. It solidified its position as the top beauty and personal care retailer in the U.S. Market share keeps growing, even in prestige beauty. Prestige brands on Amazon grew around 35% year over year.
Even high-end stuff is flying off the virtual shelves at Amazon. What about traditional stores? Drugstores? Department stores?
Well, the Drake Channel, CVS, Rite Aid, Walgreens, they've faced real challenges. Hundreds of store closures in 2024, more expected.
Ouch.
Yeah, and they saw the steepest decline in mass beauty sales in 2024. But that contraction does create an opportunity for specialty beauty retailers like Ulta or Sephora to maybe expand their offerings and grab some of that market share.
Interesting, a reshuffling. Now, the report also talks about the rise of dupe culture. We see this everywhere online. What's the actual impact?
Beauty is the 4th most popular category for dupes.
Yeah.
And Amazon is the main place people buy them. 55% of dupe purchases happen there.
Why so popular?
It's largely driven by younger generations, millennials and Gen Z. They're heavily influenced by social media showing cheaper alternatives. About half of them report using makeup dupes.
Half. Compared to
about 30% of the general population. But here's a twist. The report suggests duped products can sometimes continue to grow because all the comparison videos actually increase awareness of the original product too.
Huh. It's like free advertising, even if they buy the dupe.
Kinda, yeah. Weird dynamic.
Okay, let's touch on some global stuff. Tariffs. Always a worry. Potential impact on beauty.
Yeah, the potential for rising tariffs under new U.S. trade policies could definitely disrupt supply chains. It could mean higher costs for raw materials, packaging, finished goods,
So higher prices for us.
potentially. The report estimates over 11,000 cosmetics products in the U.S. could face price hikes. This could be especially tough for smaller indie brands.
Right, they don't have the financial cushion of the big guys.
Exactly. They might have to raise prices or could become less competitive, so brands are looking at things like nearshoring, maybe moving production to Canada or Mexico, or using hybrid approaches.
Trying to navigate the uncertainty. And
Yeah.
what about the Chinese market? Huge consumer base there. How's that looking?
The report points to a pretty slow post-pandemic recovery in China. Consumer confidence is down, people are cautious about discretionary spending.
So less spending on beauty.
Yeah, and in that environment, local Chinese beauty brands are really gaining traction. Consumers see them as more affordable, and maybe the quality gap with Western brands is narrowing in their eyes.
And that hurts the big international players.
It has. Giants with big China exposure, Estee Lauder, Shiseido, L'Oreal, they saw share price declines in 2024. Some companies, like Sephora, are even restructuring their China operations.
Wow. A really significant shift in that huge market. Okay, we've covered a ton on the consumer side. Let's shift gears to the second part of the report, the M&A market overview. Mergers, acquisitions. What's the general feeling for 2025?
The expectation is definitely for an acceleration in global M&A activity in 2025. 2024 was a bit mixed, but sentiment seems to be improving.
What signs point to that?
We're seeing more deal launches, more pitch activity. There's also been an uptick in larger deals and more private equity exits, which are usually positive signs.
Okay, sounds promising. What's actually fueling this optimism? Why might deals pick up?
Several things are lining up. The U.S. financing markets, strong as they've been in 2 years, mainly thanks to the Fed cutting rates.
Makes borrowing cheaper.
Right. There's also this sense of a more pro-business backdrop, maybe less tough M&A regulation after the U.S. elections. And importantly, there's a ton of cash sitting on the sidelines.
Ah, the dry powder.
Exactly. Both strategic corporate buyers and private equity firms have near-record levels of this dry powder. That capital needs to be put to work, which should drive more M&A.
So private equity firms are itching to make deals.
They seem to be. PE indebtedment activity broadened out across more sectors in 2024. And there's pressure on them, too. Distributions back to their own investors hit a 15-year low in 2024.
So they need to sell some companies to return cash.
Exactly. They need to monetize those portfolio companies. We saw a rise in sponsor-related M&A exits in 2024 because of that. And the better debt markets mean they can also go after bigger targets now.
So it's a mix of available cash and real pressure to deploy it or cash out. How does the beauty sector specifically fit into this M&A picture? Is it active?
Yeah, beauty saw a rebound in deal activity in 2024, kind of mirroring the broader consumer market. Q3 2024 was particularly strong. Deal activity jumped 78% compared to Q3 2023.
78%, that's huge.
Yeah, and year-to-date volume was up 18%. We saw a comeback in both traditional M&A deals and also growth-focused investments. Growth deals actually led the way in Q3.
Interesting. So what kind of beauty companies are attractive targets right now? What are buyers looking for?
Well, the report talks about strategic buyer sentiment. The bar seems higher now. Acquirers want brands that offer a clear, strategic fit, something that fills a gap they can't easily fill internally.
Not just buying growth for growth's sake.
Right. And profitability is critical. Just showing a path to profitability isn't enough anymore. They want proven scalability, a sustainable, profitable growth story.
Makes sense in this environment. Be more selective. What about the companies making the products, the contract manufacturers? Report mentions consolidation there.
Yes, the CDMO market, contract development and manufacturing organizations that's seeing ongoing consolidation.
Why is that happening?
It's driven by increasing demands from consumers and retailers, plus tougher regulations like MOLC-RA, the Cosmetics Regulation Act. It makes sense for these manufacturers to scale up. And it's a growing market, projected $2.9 billion in the U.S. in 2024, growing at nearly 8% CAGR. So, attractive for investment and consolidation.
Okay, got it. We've navigated the consumer trends, the M&A outlook. Now for the final piece, the equity capital markets, stocks, IPOs. What's the outlook for beauty and wellness there in 2025?
Well, looking back at 2024, the major stock indices actually did really well. Mostly driven by growth sectors like tech, big tech, the whole AI excitement.
Right, AI was huge.
Yeah. And we saw investor appetite for risk warming up, especially in the second half. Small caps, growth stocks performed strongly,
Hmm.
and the Fed easing, cutting rates, that was seen as a big turning point.
So the overall market backdrop seems reasonably positive. How does that translate to IPOs, especially in beauty and wellness?
Overall, IPO activity did improve in 2024. It was up 48% year over year, but
But still low compared to normal years.
exactly, still about half of what you'd consider normalized level.
Mhm.
Interestingly, the bigger IPO deals, over $300 million, they tended to perform better after listing.
Okay. Any PE-backed companies going public?
Yeah, there were 20 private equity-backed IPOs in 2024, and they delivered strong average returns. So the expectation is that this momentum continues, and we could get back to more normal IPO levels in 2025.
What's normal? Like how many?
The report estimates maybe around 150 IPOs total, with maybe 10% of those in the consumer sector, which includes beauty and wellness.
Okay, 15 or so consumer IPOs. That would be a definite improvement. What's driving that potential comeback?
A few things. The improving macro picture, steady U.S. growth projected for 2025, driven by consumers and corporate earnings. Also, history suggests equities tend to do well the year after a U.S. election.
Huh. The election cycle effect.
Right, and IPO activity often picks up post-election, too. Plus, after a few slow years, there's this big backlog of companies waiting to go public.
Pent-up supply.
Exactly.
Yeah.
And potentially pent-up investor demand for new names. And PE firms. They're looking at IPOs again as a real viable exit route for their companies.
So the IPO window might be opening wider again? How did existing public beauty and wellness companies actually do in 2024? Was it all positive?
It was pretty mixed, actually. Public CPG companies with a strong beauty personal care focus. They generally did well, helped by sales growth. But the public beauty and wellness platform companies, they often faced more challenges.
Why the difference?
A lot depended on exposure to Asia, especially China. We talked about the slowdown there that hit companies with big business in the region. Plus, inflation made consumers more deliberate, seeking value, which maybe favored some CPG brands over pure-play platforms.
Okay, so not a uniform picture. It depended on the business model and geographic exposure. Lastly, the report includes current valuation metrics for public companies. Any key takeaways from those numbers?
Yeah, looking at those enterprise value multiples, how the market values companies relative to revenue or earnings, you see a really wide range. It depends heavily on the segment. Platforms versus retailers versus diversified CPG versus international players.
So the market values different types of beauty companies very differently.
Definitely. It really highlights the different growth expectations and market dynamics at play for each type of business. It gives you a detailed snapshot of where things stood at the end of 2024, a good benchmark for thinking about future valuations and investment opportunities.
This has been, wow, a really thorough deep dive into the Baird Beauty and Wellness outlook for 2025. Lots to digest. To kind of wrap it up, what are the main takeaways you think our listeners should keep in mind?
I think it boils down to a few key things. First, we've got this dynamic consumer who's smarter, more focused on efficacy and value, but also really embracing tech and these hybrid products.
Right, demanding more.
Second, the M&A market looks poised for more action. There's capital available, motivated buyers, both strategic and private equity.
Okay, deals could pick up.
And third, the equity capital markets, the IPO scene, are showing real signs of life again. We could see more companies going public, offering new investment opportunities in beauty and wellness.
It's definitely clear these industries are anything but static. It's fascinating how it all connects, social media trends driving consumer demand, global economics hitting M&A and stock performance.
Absolutely. And as you think about all these trends, we discuss the whole skinification idea, TikTok's massive influence, how retail is changing, this convergence of beauty and wellness. It really makes you consider how they might be shaping your own view, your own engagement with these sectors.
Definitely gives you a lot to think about. So with all this change happening so fast and the financial markets may be recovering, here's a final thought for you listening. Given this pace, what do you think will be the next unexpected breakthrough or market shift? What's going to grab consumer attention and investment in beauty and wellness in 2026? Feels like we're just scratching the surface.